We'll begin in 1 minute. All right, welcome everybody. Hey, it's Victor, and I wanted to thank you all for showing up for the presentation today. We have about 30 or so folks that are registered, almost exclusively clients of mine, either Medina Law Group or Palante Wealth or both. So it is really nice to get a chance to present in front of you. We got 30 people registered pretty quickly. Obviously, I wanted to get in front of everybody with an elections-based presentation as soon as we understood what the outcome of the election was going to be. By the way, if you're here and you're a client and you feel comfortable, I'd love to know that you're here. So if you could use the comment box to go ahead and just let me know that you're here. I'll be able to see the comments as they come across on YouTube. And similarly, if you have questions along the way, feel free to post those as well. Even though there's a little bit of what we call latency on that, you post the question, it takes a while to go up to the cloud and back down again. And so I might move off from the topic a little bit. When I see the question posted, I will circle back around and give you an answer to the question. I terribly miss presenting in front of all of you. Whether it's in our educational center or outside underneath the tent or whatever it is, you know, some of my best interactions and opportunities to be with clients are when we're in person. So know that I'm missing you very much, at least seeing you in person, but I'm glad that I have the opportunity to present in front of you. By the way, if you are not a client, so you're trying to figure out you got this link and you just registered, let me briefly introduce who I am. My name is Victor Medina. I am the founder of Medina Law Group and Palante Wealth Advisors. We are an estate planning and retirement planning firm, and many of our clients are clients of both our legal services. We put a great estate plan for them, as well as our retirement services, which is that we manage money and put insurance solutions in place for them to help them manage through retirement. So if you like this presentation and you'd like to learn more about what it is that we do, we're going to give you an opportunity to set an appointment, and you do that by texting the word retirement to 609-293-4344. By the way, if you're a client and you'd like to get on my calendar to follow up on some of the issues that we're going to be talking about today, you can either email us directly or use the texting function so that you can get the link and get onto the calendar, and then we can have a chance to talk to you. All right, let me get started with the presentation for today. Before I get too deep into this, I have to show you this slide. This is something that compliance asks me to show you. And basically what it tells you, amongst other things, is that I'm not giving you any personal investment advice. I'm not giving you any specific solutions. I'm not recommending any products. The topics that we're going to talk about today are largely the topics that are educational in nature. I'm going to do my very best in the presentation of this to be as apolitical as possible. So if I'm presenting something that one particular side believes or doesn't off of that, please don't take any offense to this. I'm not kind of promoting one side over the other. I'm just trying to lay out as much of the facts as what I know and what I think are important in what it is that we're going to be sharing. So anyway, I think this is long enough for the disclaimer. Let's try to figure out exactly how we got here. They say hindsight is 20/20, but I'm not sure anybody's hindsight could have told us that 2020 was going to play like this. And you know, no doubt, look, you've been staring at your smartphone or your laptop, or if you're a Twitter follower, just what they say, doom scrolling, trying to figure out what's going to be happening with all of the information that we have. And waking up every day to try to make sense of everything can be pretty daunting right now, with the virus commanding the bulk of our attention. And then on top of everything else, we were in an election year. And so whether your vote got registered at your local precinct, or with a setup similar to kind of what you see here, where you dropped off something, or if you did it by mail, which is what we did in New Jersey, or you dropped it off to one of the boxes, it seems like we're on the precipice of a dynamic shift to where we're going to be going. And when it comes to factors that decide elections, issues always get raised, issues always come to the forefront, and issues continue to surface well after 2020. Technology, trade, infrastructure, just a few topics to touch on and involve aspects related to regulating social media, steps to take with China, how to adequately repair roads. There is no end to the issues that we're being presented with as we try to navigate this. In addition to that, we had any number of political issues that were in front of us, whether it was Black Lives Matters, protests that were going on, the federal response to those, and then you layer on top of that healthcare and the challenges to the Affordable Care Act and whether or not it's going to get overturned, and the appointment of a Supreme Court justice on the eve of the election. Again, it just seems like this overwhelming wave of issues that are being navigated, and our job is to try to find some sense of clarity and find some sense of confidence on what we're doing so that we can help navigate those issues along the way. And that's really part of what our goal is. When we get to the form of the election in and of itself, I hope that you voted. It's a civic responsibility that shouldn't be taken lightly, but I'm not sure anyone envisioned that we would be going through as much as we have in terms of figuring out the results of the election, how long it was going to take. I know that at least in my recent memory, I was glued to cable news as much as anyone else, and I don't recall the last time that I was. I don't know that I was as politically active in Gore versus Bush, but I happened to be clerking for a federal judge in Boston, which gave me an opportunity, at least during the daytime, to have lunch with that judge and discuss some of the issues that were going to be on that. This time it just felt a lot different. And the goal for this, obviously, in terms of trying to get some sense of where things were going to be settled, was to understand how the election was going to affect, particularly for me, for what it is that I do, the retirement and specifically the retirement of my clients, and what is it that we were going to help them navigate through in terms of the advice that we're going to be given. And so what we're going to be talking about are the effects of the election itself. Joe Biden ends up being announced as the winner. So he came from a pack, just a very crowded pack of Democratic hopefuls when he won the South Carolina primary. And obviously Biden has knows his way around Washington, having served as a senator for over 35 years and 8 years as a vice president. Here's the thing about that is that his policies, he was quite prolific in writing out what his policies were going to be in very detail. They were very bold all the way through. In some part, that gives us some measure of comfort in the way that we're going to be advising you as our clients throughout this, because if we can have a sense of the direction about where things are going, it will give us an opportunity to kind of better understand how to plan for that, as opposed to not understanding, at all what the plans look like or where they're going to be. By the way, seeing all of the people saying hello, and hello to all of you back. I miss you terribly. One more thing in terms of the layer of the way the elections are going. So we have the presidential election largely settled about what's going to be doing. It hasn't been certified yet, but by all accounts, and by math, this seems to be a pretty done deal. What we don't have yet settled is what's going to be going on in the Senate. And here's the reason why that's important. So probably most of you are already up to speed with what's going on in politics, but there are 2 Senate seats in Georgia that were not settled by over 50%. And so there's going to be a runoff in those 2 seats. If the Republicans win either of those seats, they will maintain control. If they win both of them, it'll be 52-48. If they win one of them, it'll be 51-49. If they lose both of them, Okay. Then what will happen is that the Democrats will be able to control the outcome of the Senate decisions because it will be a 50-50 split with the vice president, Kamala Harris, serving as the tiebreaker. And so we've got two different things that we've got to plan through. What we want to be able to understand is the impact of a Republican-held Senate. And with a Republican-held Senate, they're going to be able to serve as a measure of a speed bump, because the House is going to be controlled by the Democrats, the executive branch, the presidency controlled by the Democrats, and now the Senate can serve as a speed bump from that. And there's going to be any number of impacts from those types of things. They're going to block implementation of most of Biden's most bold proposals off of that. But if it ends up swinging in the other direction, we still have other things to navigate. So even though the entire government, in terms of the executive and the legislative branches, are going to be controlled by one party, there's still more navigating that has to happen, because even within the Democratic side, there are more progressive ideas that needs to be managed, because if, for example, Biden comes out in favor of a more moderate idea, it might upset the progressives that are voting members of that and may need to navigate and negotiate over each one of those along the way. So the Senate is going to have as much to do with what happens with these policies as anything else. The other thing that, of course, that we're navigating, and by the way, I would say largely poorly, is the COVID-19. And so while there are sharp differences between the two candidates, their personalities, their platforms, what makes obviously 2020 different from any other year in our existence is the coronavirus, COVID-19. And the pandemic obviously has changed how we all live, whether it's social distancing or the fact that I have to come in a presentation to you like this, have you stream something on YouTube, and don't have the pleasure of you in our education center, maybe feeding you cookies and coffee, but it's changed everything in the way that we do everything on our day-to-day basis. It also has an impact, of course, on the economy, the stock market, and things that are related to that. We had one long shutdown. We are on the verge of a second potential shutdown, with waves going across and sweeping the middle of the country, whether it's the Dakotas, Illinois, Indiana. Those states are the ones with the highest rising number of cases in COVID, hospitalizations going up, and we are entering a winter where we're really not sure what's going to happen from that, and with the potential to shut things down even further as well. Our entire global structure is affected by the impact that COVID-19 is going to have. So it's not just the immediate future off of what we have, but the virus has tested our patients and the results are not positive. U.S. leads the world in coronavirus infections and death. And because the U.S. also leads the world in terms of its financial markets, we can expect that it's going to have an impact on that as well. Okay, so what is it that the stock market itself thinks about what's going on? If you were paying attention, hopefully you were, we remember what happened in March. On March 11th, the World Health Organization deemed COVID-19 a pandemic. March 9th, 2 days earlier, the Dow Jones sustained its largest plunge to date. And then on March 12th and March 16th, there were two subsequent plunges as well. So the stock market reacted in the initial component of it pretty poorly when it thought that it was going to disrupt what was going on with the markets, people's work, and whatever else. It's rebounded since then, but we are on the verge, if we're on the verge of a second wave with a second shutdown, of having future volatility as well. And that's just on the COVID-19 side. What we really want to try to understand is what is the impact of the election as well. So if we have all of this crazy volatility kind of going on that's related to the pandemic, what in fact is the impact of the election? And so we're going to watch me kind of come across the screen over here for a second. But if we look at this graph over here, paying no attention to the names, what we're looking at is how the market has reacted specifically with respect to the S&P returns based on the political party, and then there is the list for the number of years in office as well. So if we look and just look at the D's and the R's that are spread from the top to the bottom, what we find that the market seems to really have no preference which party is in charge. There is as many of these that are one party as they are on the other party. And this is ranking it by total S&P and returns. We'll talk about the top two in a second. But most important are the trends. And the trends are consistent all the way across. Let me go ahead and take myself off the screen real quick so that you can see the one area in which we dipped around the Great Depression. But if you're looking at this graph, what we notice is that there is a steady climb. This is representing the growth of $1 invested in the S&P 500 from January 26th through December 2019. And, generally speaking, it's a steady climb, even when there are dips. Like if you look around 2019, obviously the recession in 2009, where the end of the Bush era, you see that how it starts high there and ends low right before Obama picks up. But where Obama ends, even in the middle of his term, first term and the second term, is higher than when it started. So trends here tend to support that markets really don't care too much about who's in charge. As long as we can make some steady progress, capitalism seems to be what wins the day. Now, if you happen to be conservative, these two people may not be your favorites, but based on the chart that I showed you, it's quite possible for you to have made money, and significant money at that, in the market when these two were president. Moreover, my role as a financial advisor, it's incumbent upon me to help you maintain control of your finances, no matter who is in the Oval Office. So before we continue to look into this presidency, keep in mind that financial issues that we face in this country could have as much of an impact on as any election result in terms of what you consider doing to help safeguard your financial future. Moves that you take now don't necessarily hinge on any one election. If we think about it, how much longer before our next presidential election? Well, we're going to have another election in 4 years. And so the idea is that you will have more times to vote over the course of navigating your retirement than your retirement is going to last, right? You're going to have a longer retirement than any one presidential election or presidential term. And as we saw on the chart that was in there, the trends are what are consistent. And so what we want is some sort of guiding principle to help us understand how to react to what's going on, control the things that we can control, and be able to navigate that based on the policies that we have in place. So we're going to look at the 2020 election, not just in terms of the election, but also in terms of circumstances that create different financial considerations for you to look at right now. And we're going to go ahead and we're going to focus on the policies that Joe Biden has let out. So one of the things that was very clear on all of the documentations in there, in what was released, is the breadth of the thinking that went into the policies that are in there, which gives us a lot of detail on how to navigate this going forward. So let me outline for you some of the policies that are in place as being proposed. I'm going to focus on two things. We're going to focus on proposed income tax policies, and we're going to focus on proposed estate tax policies. Let me handle the estate tax policies first. So one of the policies that was proposed was a return to 2009 levels of estate tax exemption. So as a reminder, the estate tax exemption right now is $11 million, and that's a function of the Trump tax cuts that were passed in 2016, as well as some inflation adjustments that have happened over the years, and how we get to just north of $11 million per person, which means that couples can protect $22 million, which means that for most people, estate taxes are not going to be a problem. When we look at the estate tax exemption being reduced to 2009 levels and at $3.5 million, well, the first is for most of my clients, not all of them, but for most of my clients, it turns out that the doubling of that, if they're married, that $7 million is going to cover most of their wealth. But that $3.5 million ends up being somewhere close to what they might die with when they eventually pass away, if they've got 20 years or more worth of retirement. So what we're thinking about here is how do we manage how those estate taxes, because the estate tax rate is one of the highest rates that are out there. So we think often in terms of income taxes and paying high income taxes, whether they're high capital gains taxes or high ordinary income taxes. But for a while, we haven't had to think about, over 10, 11 years, we haven't had to think about estate taxes because it wasn't captured in there. As a reminder, those estate tax rates go anywhere between 50 and 55% of the assets that you leave behind. So we have to be able to do that, manage that so that we can reduce it. That one, even if the exemption levels don't concern you because they're too high for the wealth that you have, this one should concern you, which is the elimination of a step up in basis at death. Now let me explain to you the way that that works. So these assets that you have owned for a very long time, whether they're your home or investments that you've had, outside of an IRA, investments that you had, a lot of them are going to have embedded gains. And so those are going to be, the value has increased over time. And if you're familiar with investing, when you sell that, you're going to end up having to pay taxes, probably capital gains taxes. A lot of people, as part of their estate planning, choose not to sell any of their assets and wait for them to die. I have a client who's got a very concentrated position in one company that they worked in for their entire life, and there's a lot of embedded gains. And one of the things that the client said to me is, I'm really fearful about selling this right now because it generates a good income for me, but there would be a lot of capital gains taxes that are owed, and I know that when I die, all those capital gains taxes go away. After that point in time, I hope my kids come and invest with you, but I really can't agree to be selling this right now because of the big taxes that are in place. So if we think about that with respect to the elimination of the step up in basis, what that means is when you die, those taxes are still inside of your account. So the elimination of the step up in basis starts to drive some tax planning considerations because we can no longer wait for death to erase the taxes that have been embedded in our account. We need to grab the bull by the horns and think about managing those capital gains taxes ahead of time and on our own, which leads us to the income taxes that are in there as well. And so one of the proposals is to repeal the Trump tax cut and specifically to have them go to pre-2016 levels. What that means is that the rates themselves are going to immediately increase. So one of the things that we saw is those tax rates that used to be at 10, 15, 25, and 28% went down to 10, 12, 22, and 25%. Well, if we pass this tax law change, they're going to go back up. Then they go up to the 10, 15, 25, and 28. Now, this is something that we have been thinking about in our firm already. So there are a number of clients that we have presented plans on navigating income taxes for the next 5 years because the Trump tax laws themselves said that we would go back to those rates at the end of 2025. Is automatically set to sunset back to those original levels. Well, if Biden's able to pass his tax plan, we're going to go to those a lot faster, sooner than 2025. And so that's one of the things that's on the tax law changes. The next thing is increasing the income levels of when you contribute to Social Security. Again, that's for our highest wage earners that are in there. But there's the other thing that is part of the proposal, which is a potential increase in capital gains rates to ordinary income treatment once we get beyond a certain level. So there will always be, let me go over to the big screen here, there will always be a low capital gains rate if you don't make a lot in income. And so if you have a very concentrated position, though, however, where you are now trying to balance both of these planning strategies, you're trying to balance the elimination of the step up in basis, as well as managing a potential switch from capital gains to ordinary income treatment if you get above a certain threshold, it presents for us a planning opportunity where we ought to think about realizing some of the capital gains that are inside of your account when we know that those capital gains are going to be at the lower tax numbers. Now, it's not anything that I would jump the gun at, but I would say this, and this is important to think about in terms of the timing of everything that's in here, and I really need you to pay attention to this. Most U.S. IRS tax laws can be retroactive to the year in which they are passed. And what that means is that, for this case, we could have, for example, the Senate runoff in January of 2021 that then gives control over to the Democrats in the Senate. So now they've got the House, the Senate, and the presidency, and that then allows them to pass a set of tax law changes in March or May of that year that are then retroactive for the entire year. So if you delayed in realizing capital gains, or even if you waited to the end of the Senate election and realized your capital gains in February thinking I've got all of the treatment of the old tax law changes are not constitutionally prospective. They're not unconstitutional. They're retroactive. So now you waited too long to realize your capital gains, and that means that the capital gains in that year could now get ordinary income treatment. Now, this is a hypothetical situation because we don't know if that's the law that's going to be passed. But if we're trying to guard against how to manage your assets in retirement, I would say to you that the realization of some of your capital gains before the end of this year, which we know for sure will have the old tax law treatment. We know what the capital gains rates are going to be in 2020, and we know that they're not going to pass any tax law changes to increase taxes before the end of the year. Then it might make sense to realize some of the higher capital gains that you have in this year rather than waiting for future years. So that's a look on the specifics of each of the policies that are in place. It is a overview on what Biden's tax law changes are proposed to be. This comes directly from his plan. And then it kind of gets us to kind of what to do with this if we don't have the capital gains treatment. How should we be thinking about tax planning generally? And I'll tell you this, just as a brief kind of story around this, back in March, many of you who are investment clients of ours heard from us very soon after the market volatility happened. In fact, you may have been contacted by my mom and dad, who I co-opted to work for me for a little while, scheduling those appointments so that I could speak to you for about 15 or 20 minutes. And most of the conversations kind of went like this. People weren't overtly worried about what was going on because we were going over the plan that had taken this into account already. And so there was no real reason to panic or change strategies simply because the market was being volatile. It was an opportunity to remind our clients that the plan that we put in place was working exactly as intended, as the accounts that we had protected with products like annuities and also with putting in place diversification on our investments. It was working exactly as intended, and there was no real reason for them to panic. However, we did get an opportunity at that point in time to talk to some of the clients who were grateful to talk to us, but shared stories about how their sister or their friend hadn't heard from their advisor at all, and they were kind of running for cover, I suppose, based on the investment that they had. So I want to make a very clear request from everybody that's watching here. If you have somebody who you care about that you think could be helped by our investment strategy and our approach, we would love the opportunity to talk to them. You can send them a link to this webinar. You can send them our information. You can even have them text retirement to this number and introduce themselves to our firm, and we will take great care of them all the way through. One of the best things that we were able to do in having those conversations was really to check in on how people were doing health-wise, how they were dealing with the pandemic and the lockdown, seeing if there's anything that we could do. We had extra toilet paper here in the office. We were offering to drive it to people's houses, but it did give us an opportunity to check in on the people in the investments. And if that's the kind of treatment that you would want for somebody that you care about, you would really be helping them out by introducing them to our firm, because you're already aware of what good work that we do and how well we care about everybody, and we would certainly appreciate any referrals that you've got. Kind of going back to some strategies about what to do with planning. Most of our planning is focused on taxes. So just as a reminder, one of the signature legislative achievements during Donald Trump's time in office is he signed the Tax Cuts and Jobs Act, whether they're called the Trump tax cuts or however you want to call them. That legislation cut some of the individual income taxes, and the changes are set to expire in 2025. Now, Congress could renew some of all of the or some or all of the provisions at any time. And so, what we think about in terms of this is using the tax structure the way that it is to help us navigate people with large IRAs. So we can think about converting them into a tax-free account like a Roth IRA. So here's a quick reminder off of that. The traditional IRA is the IRA that you contributed money to pre-tax. It has not paid any tax on there at all. It has grown tax deferred, but you pay taxes when you withdraw it. Now, a Roth IRA is funded with money that taxes have already been paid on. So you pay the taxes on the way in, and then you get two benefits. The first is that those grow tax-free, and they are withdrawn tax-free. So to use the best analogy that I've come up with is, you want to think about farmers for a moment. Obviously we want to give thanks to farmers, put food on our table, especially all the challenges in the pandemic. But you think about the seeds that a farmer plants. Would you rather pay taxes on the seeds, or would you rather pay taxes on the harvest that comes afterwards, right? Well, you'd much rather pay taxes on the seeds because you're hoping the seeds grow into something much bigger than what they are when they went in. So in this case, when we're thinking about the choice between it, the seeds are the traditional IRA, and the money that we take out, the harvest, is what it grows into. If we pay taxes on the seed as it goes in as a traditional IRA, if we pay taxes while it's in the traditional IRA early, then the harvest in the Roth IRA ends up coming out tax-free, and we've essentially gone ahead and saved all of that money. And that is a service that we're doing more and more for our clients that are coming in with money to think about. We did a tax planning seminar at the end of August, the beginning of September, where we talked about what the value of having money in each of 3 different tax accounts are. If you're interested, there is a webinar similar to this one where we talked and focused on that, where we talked about the 3 tax buckets, where we never pay tax on money, we only pay tax on money as it comes out in the taxable account, and we gave you a strategy for how much should be in each one of those. So kind of going back to the election results and the proposed tax changes, I would say to you this, whether or not we maintain full democratic control off of everything along the way, presidency, House, and the Senate, or whether or not the control is split, where it's the presidency, the House, but the Republicans end up controlling the Senate, we're going to have a situation either in the near term or in the year 2025 where we're going to switch our tax structure from the things that are beneficial today to something that is not as beneficial in the future. And the reason why this is important for you to consider is that this IRA that you've been holding on to, maybe in some cases only taking out the minimum amount going through there, may potentially become a high tax liability in the future. And what I'm going to encourage you to do is that if we haven't had an opportunity to walk through some of the tax planning for this, we may want to go through the exercise of modeling what a Roth conversion looks like over a couple of different time periods. We might want to model what it looks like in 1 year, where we know what the taxes are going to look like in this year and we can count on what that's going to be, or we can model over 4 or 5 years depending on where you want to place bets off of this. So it doesn't matter exactly what you choose to do in terms of the timing, but it is important for you to have the answers to the questions about what the impact is, because this strategy about kind of converting things over into Roth IRAs becomes a hedge against the future tax policy, because if we can get into a taxes never bucket and we can increase that and have that grow over a period of time, we can smartly manage your tax profile over the length of your retirement. And by the way, there are additional reasons to do that. Not only do we want to do that to pay fewer taxes overall, and not only do we want to do that to hedge against tax policy risk, But at the same time, your Medicare Part B premiums are set based on your taxable income. So if we can quickly get into a position where a Roth IRA, or in some cases we use some specially designed life insurance to be able to do that, where we take policy loans from that, if we can get you into an income tax-free bucket, it means that your Medicare Part B premiums will be the lowest, because none of that income will count towards how we price the Medicare Part B premiums in the future. And at the same time, we'll be able to then keep all of your Social Security income tax-free if we can have the biggest bucket of what you live on as being the Roth IRA, because your Social Security is taxed based on your taxable income from other sources. So if all we have is a traditional IRA, then more and more of that money is going to end up adding to how much of our Social Security gets taxed along the way. So listen, here's the thing about it. No matter what happens with the elections that are in there, no matter what happens on the Senate runoff, no matter what happens on all of the challenges to the elections, no matter what occurs from that, the point of having an advisor, or the point of planning, is to get to a point in time where you feel comfortable that things are going to be okay. And here I do want to take a moment and talk a little bit about sort of our services in this area. So some of the people that are on the call are legal clients of ours, but have not yet seen the wisdom of becoming financial clients as well. But I want to talk a little bit about what it takes to get to a point of having fewer worries or peace of mind kind of going forward. And here's the thing. When you go into retirement, just in the same way that we believe of this with our estate planning, you want a foundation that you've built that you know that you can lean on, that is structurally sound. What we don't want to have happen over time is to sort of find that there are cracks in the foundation. And by the way, cracks can show up any number of ways. It can look it could look a little bit like losses in the market. So if we have another market correction, the cracks in the foundation can be that if you're just withdrawing money with no plan for income, that a lower value on that threatens the income that you're living on because you don't have a plan around that. It could be a crack in the foundation around tax planning, that a higher taxable tax policy and how much you pay in taxes then threatens the plan that you put in place, because more of your money will be going to your partner in retirement, the IRS. Or it could be dealing with setting up your estate and making sure that if you get sick in the future, that long-term care doesn't visit on your head and eliminate that. So, for most of the people that have done just legal planning with us, we've taken care of the estate issue. We've talked about long-term care and asset protection. We've talked about how to protect assets there. And then for those of us, the people that we've done the financial planning as well, then we're able to make sure that the income, investment, and taxes are cared for. And it does bring me to just the last thing that I would encourage. For those of you that have not yet seen or have created for you our Make It Last Retirement Checkup, this is the number one action that I could encourage you to do. We want to answer the question, are you going to be okay? And a retirement plan like this is designed to help you put that concern to bed, because we've tested mathematically how these things are going to be done. We've thought smartly and strategically about what might be coming on in the future. And we are considering, not just for you, but for all the breadth of our clients, in all of the experience that we've had, essentially how to make sure that the test can withstand the times that are coming in here, whether it's the uncertainty of the election, the uncertainty of the impact of COVID, the uncertainty of time, or tax policies that are going to be going in there. It doesn't matter what the challenges are going to be. We're going to need that plan to be leaned on as part of what gives us a comfort kind of going forward. So if you're a client that started earlier with us and didn't have one of these plans created for you, I want to encourage you to reach out so that we can create one for you. And then similarly, if you are somebody that is considering what's going on in your own situation with your own advisor, maybe your advisor hasn't created a plan for you, creation of this plan will help you get some peace of mind. And then just finally, just an encouragement. By the way, if you want to make an appointment, you could text the word retirement to 609-293-4344. I just wanted to end with this, which is the following. because I wanted to keep this under 45 minutes, I wanted to let people know that if you have somebody that you care about, there'd be nothing that we would consider more of an honor than be able to help them as well. And the way that you do that is you encourage them to reach out to us, and we will do for them the great work that we've done for you in terms of putting a plan together. I know it can kind of be awkward, kind of having a conversation. Hey, what's your advisor been doing with you? But you could take the reins and say, just watch this great webinar where I got an opportunity to learn what the election results were going to do to impact my retirement. The information was very progressive and forward-thinking, and it's going to help me do my planning. What's been going on with you? Did you have a similar resource? Would you like an introduction? Is there some way that I could get you in touch? Because I think that could really help you along the way. And it's the same tool there, just to text the word retirement to 609-293-4344. So listen, I'm going to just kind of what they say vamp in the world. I used to play jazz and the trumpet. So I'm just going to hold here for a couple of minutes and see if anybody has any questions that they want answered. I want to give you an opportunity to be able to do that. And so it will take a second for those questions to come across the screen. And I just kind of want to give you an opportunity to post those. But assuming that we don't see anything in that, or assuming we don't have any questions in there, I want to thank you for taking time. It's a weird Tuesday night. You probably have dinner cooking in the background. If you've got any follow-up questions, don't hesitate to reach out to us, and we'd love an opportunity to continue a conversation. If this is an area that interests you because it's something that we've done legal planning, but we haven't done financial planning, and you want to explore that with us, there's no charge for that. We would love the opportunity to talk to you a little bit more about what we do and how we can help. I really believe in planning as something that's important for people to do. And with that, I'm going to wrap up the presentation because I see any questions coming over. I did want to thank all of the people that showed up and everybody that posted something that was on there to say hello back. I miss you folks a lot. I can't wait for an opportunity to be with you again when it's safe to do so. But know that we're available here through Zoom or anything else that you need. All right. So with that, I'm going to wrap up. Thank you for everything, and look forward to speaking with you soon. Hope to hear back from you soon. All right. Take care, everybody.